Hey everybody, Chuck Barone here. It's Wednesday, April the 5th, 2023. Another crazy day on Wall Street. First, of course, we want to welcome everybody to the show. Thank you guys for your support. Couldn't keep going without you guys. We appreciate you. Markets today. Well, guys, these markets, they just don't really have much direction right now. They're torn between, is it going to be a recession where the Fed kind of doesn't pound rates much higher? Is it going to just be a pause? If it's going to be a recession, how deep is it going to be? You know, last year was a big lesson for everybody. Sure looked like a recession was coming. Didn't happen. That weighs on people the way they're thinking right now. So, you know, you're torn between, is it going to happen? Isn't it? The market's just drifting right now. Dow market's mixed today. Not a great day. Dow up 80 points, 33,482. NASDAQ down 10, 4,090. Or I'm sorry, S&P down 10, 4,090. NASDAQ down 129, breaking under 12,000, 11,996. Not a great day for the stocks today. Bond market, bonds attracting some money. Yields continue down their trend. The 10-year falling 5 basis points today, 3.29%. The 10-year down 3 basis, or the 2-year down 3 basis points to 3.80%. So this market, the bond market, again, not much direction, not knowing which way to go. So it's just kind of drifting there, kind of drifting down, I guess, yields down, prices up. I don't know if that's just money fleeing the stock market, if it's, you know, investors buying these bonds, going to hold them to maturity. Who the hell knows what's happening there right now? It's crazy. The dollar, small rally today, not a lot. The dollar 101.92 on the index. Let's see if it gets back above 102. You know, the falling dollar has been great for metals, gold and silver. Mixed today, but basically flat for gold and silver today, with gold gaining 10 cents, $2,019.80 per ounce. Silver losing 10 cents per ounce at $24.90. I still think metals have got a ways to go in this rally, guys. This isn't over yet. You know, as this dollar continues to come down to planet Earth, which it will, these prices are going to jack up. I'll talk a little bit more about gold in the comments of the show. Oil today down small, down 34 cents per barrel. West Texas Intermediate, $80.37. It doesn't look really, it looks like this oil rally doesn't have much legs to it, does it, guys? I mean, it spiked up on the OPEC news, but it's kind of just laid flat since then. Now we're going to see the demand side. If demand kind of falls, I think prices could really dramatically come down. Now, there's a wild card in this oil thing too, though, because, you know, Joe Biden, in an attempt to bring oil prices down, released millions of barrels from the Strategic Petroleum Reserve. And now we're going to have to refill that sooner or later. And we'll see how that affects prices. You know, it brings prices down when you're going to dump it on the market. It should bring prices up a little bit when you're going to buy oil and refill those. So we'll see where that goes. Bitcoin basically flat today, 28,213. Bitcoin holding its own, man. Strong right now, guys. Let's face it, you know, it looked like a dead duck falling down to 16,000. A lot of terrible news in cryptos. It looked like the party was over. Big rally back up for Bitcoin, and now it's just holding steady in the face of all the negative news in the market, all the uncertainty, holding steady around 28,000. News you guys need today? Well, the big news of the day was this ADP jobs report. You know, this is the one that always precedes the unemployment report, which we'll get tomorrow. This showed that the U.S. payroll, now this is private payroll, so this is jobs, not government jobs, increased by 145,000 last month, a low number. Economists had been expecting 210,000, so that's a pretty big miss there. In January, it was 261,000. So you can see job growth slowing if these ADP numbers are correct. The report also showed that payroll growth slowing down. So that means wage growth slowing down. It looks like the Fed's having its way here. That's been their number one target. They want to slow down employment. They know they need to drag wage growth down, to drag inflation down. That's what their target has been. According to this report, it looks like they're having their way. But, these ADP reports have always been superseded the following day or later in the week by the actual jobs report. So we'll see tomorrow where the unemployment numbers come in. If there's a shocker to the upside, that could show that the Fed might have at least a reason to believe they can pause interest rate hikes. It'll probably buoy the market pretty good if that happens. So that's going to be an interesting way to start the day tomorrow morning. Also news today, gold, man. I know we got lots of gold and silver fans watching the show. Gold now approaching its record high. The record for gold, $2,069 per ounce. Back in August of 2020. I firmly believe this record is going to go down, man. This record will be broken before this rally ends. So gold and silver, good things on the horizon for gold and silver. There's going to be some resistance as it gets closer to these big numbers here. But how much different really is 220 and 260? It's just not that much different. So I think that, with the momentum metals have, with the demand that's parked on the sidelines in cash, those records are going down. Also news today, U.S. trade deficit growing again, man. February's deficit, $70.5 billion. We're buying more than we're selling. The main driver is falling exports. Nobody buying American stuff. Exports down 2.7%. The reason for that, they're saying at least, is, weakening economies overseas. Looks like some of those economies in Europe and some of our trading partners overseas heading toward recession, plus the higher dollar making our exports more expensive, meaning, of course, that the same amount of cash or cash money, and once it's converted to dollars and dollar costs, buys less. So we'll see. The trade deficit has not been going our way for many, many, many years. I think it's engineered that way, but these numbers are really not great, man. $70.5 billion in a month. Not good. U.S. service sector. Yesterday we got the PMI on manufacturing was terrible numbers. Now today we get the non-manufacturing PMI falling, cratering down to 51.2 from 51.5 on the index. That's a big drop from last month, guys. Economists saw it falling to 54.5. So it broke way, way, way down below any kind of expectations. Looks like services really slowing, go hand in hand with manufacturing, which has been actually in a contracting number for the last 3 months. Now 51.2, pretty close to the Mendoza line. 50 means neutral. Anything under 50 means contracting. So we're going to follow the service sector stuff. If that service sector gets below 50, you combine that with the manufacturing below 50, what's happening in real estate, mortgage, banking, the tech layoffs, it sure points toward recession. And right now, it seems like everything points toward recession for the U.S. Now, I try to learn from experience, guys. Last year, we saw 2 negative GDP quarters in a row. That is the indicator of a recession. It used to be almost considered the definition of a recession. Well, guess what? The recession didn't come last year, as the third and fourth quarters actually had pretty positive numbers. And, the first quarter of this year coming in positive, probably coming in positive as well. Not as high as they were anticipating, I guess. The Fed Now tracker down to 1.7% GDP growth for the first quarter, as opposed to their 2.5% estimate they had up earlier. But still, positive number for GDP for the first quarter. So, where is this recession? It seems like what I've been saying is kind of sticking true. It seems like it's kind of just not a universal recession where everybody's getting hammered. It's kind of a pick and choose recession. Real estate, now manufacturing, looks like services slowing. With Vegas, the casinos, the airport here in town still going great guns, so consumers have money to spend. They're spending it in Vegas, man. This town been winning $1 billion a month in gambling. $1 billion a month. So that tells me that consumers still have money to spend, are still spending that money. The week's going to get told the next 2 days, though, guys. Tomorrow we're going to get the unemployment numbers. That's going to tell us a lot. Friday we're going to get consumer credit numbers. If both of those numbers come in, like if the unemployment numbers spike up and it shows a giant rise in consumer credit, you know consumer credit can only rise so much before the people start hitting limits. So this would also be big indicators of recession coming. Fascinating couple of days coming up. Of course, we're going to be here to bring you guys all the news you need. I hope a few of you guys have had a look at our website at chuckbarone.com. You've seen the portfolio we set up. It's very simple, and I only wanted to use a very simple number. I started with $10,000, which is something that most people can do. If you want to emulate this, I'll show you how to do it. You just follow what I'm doing on the online here, and I think that I'm going to beat the S&P 500, even though I only have half the money invested right now. Percentage-wise, I will beat the S&P 500 year over year when we get to the end of February or March next year. I guess it'll be the end of February next year. I will beat the S&P 500. Anyway, guys, that's it for today. We appreciate you guys being here. We appreciate your guys' support. I'm sorry for my comments yesterday. You know, I should have known better. I get into the political stuff. It always gets me in trouble. But I really meant what I said. And I'm sorry that there's so many people who can't even hear any criticism of the red team or the blue team or whichever team they're a member of. And if they do hear that criticism, the person doing the criticizing, and whether it's true or not the criticism, that person has to go. Well, I guess that's just the way of the world. If you're that kind of person, maybe this show isn't for you, because I'm going to say it like I see it politically. You guys know how I feel. I think both sides are full of shit. I think both sides do not care about working people. All they care about is that we get on that debt treadmill and keep making those payments. That's it. That's all they care about, man. But anyway, I digress. Wrapping the show up today. We'll be back tomorrow with jobs. We'll see how the market reacts. Until then, guys, take care. Thanks.